Good evening, all. Ira Epstein, and here we are with your Spider ETF stock market wrap-up. And this wrap-up is for the evening of Tuesday, and we're at the 17th of December. Boy, it's hard to believe I'm saying that. 2024, pretty soon we'll be in 2025. It's right around the corner. Winter's right around the corner, the official meteorological winter. But, you know, many of us have been feeling that all the way through, or lack of it. It goes both ways right now. Big cold spell coming down, by the way, later in the week through from Canada, and I understand it's going to go all the way down, probably hit parts of Florida, in fact, so be ready for that. In terms of news, let's take a look at this. You're going to get the Mortgage Bankers Association number at 6. You're going to get housing starts and building permits at 7:30. You're going to get petroleum numbers at 9:30, but the elephant in the room is going to be the Fed. And, you know, it's widely expected that we're going to get what has been called now in terms a hawkish cut, which is an interesting play on words. But basically what it is that the market is anticipating the Fed will go with a 25 basis point cut. If they don't, it would be a surprise, but that's what the market is expecting. And then into a pause mode. That is the hawkish part of it. And how long the pause mode goes, I don't know. I'm in the camp that thinks that's what they'll do, but if you were to ask me now, do I think that's what they should do? Not what they will do, but should do. No, I don't think they should cut at all. And the reason is it's wasting a bullet. Right now, the economy is strong. Right now, the real interest rates, as the market is determining them, is near 4 or 5 in the 10-year. We might be going to 5% if this path keeps going like this. So why are you cutting interest rates? And inflation's not falling. So I don't see, normally when you cut rates, it's because the economy's in trouble. Do you see the economy in trouble right here? I don't think so. And the Fed can't influence the back end where high interest rates are. It certainly can influence from 0 days to the 2-year note. That it does have a big influence on. But beyond that, it's questionable as to what they do. Do I think the actions will be important? Yes, but I think what's going to be asked, which that's what we're all going to be listening to, is going to be the key. What's the neutral rate? Why did we have to cut, or why did you cut? Both words. At this meeting, if that is what the Fed does. I can imagine if they don't make the cut and surprise the market, well, why didn't you cut? The market widely thought you were going to do that. And that answer I already know, because the market didn't need it. There's many ways that this can play out. But the dot plot is what we should turn our attention to tomorrow. And when you see that, it gives you an idea how many rate cuts the members think we're going to get in 2025. That's where the attack of mentality is going to come in. 2, 3. I doubt that you're looking at 4, but who knows what it's going to show. So we will see where they're at. Let's take it from there. So when we look at the market, you know the one thing that is moving like a rocket ship up is Tesla. And as I look at Tesla and I look at the other parts, the gold market down, GDX down, XME down, copper market down, silver market down. So the metal markets have come in trouble. Remember I told you uranium looked like it wasn't continuing on the upside, even stopped covering the chart on it in here. And that's the reason why. Looks to me like it was going to pull back. Just not ready to go yet. And I know that we all want to hear that, but there's, will the U.S. allow new uranium plants to be built, and what are the conditions going to be? It's one thing to take an existing one, refurbish it, let's call it that way, get it back up and going because all the architecture's in place and everything, and even that takes a long time. But from scratch, let's see how many can get built because the AI needs them. Uber up, as a lot of traders are thinking, this is the battle for Uber. You held on at the $4 mark in AMC. Boeing took off, got up to the 175 level, actually closed a little lower. I told traders today, by the way, because that was something that I told them to accumulate starting in the summertime after all that noise, and they've got a nice lead on it. I said, if you want to take it off, you've made here about 10% on your money, maybe you do that, or if you want to hold, just hold it for the longer pull. Either way with that. Amazon and Netflix both down a little bit. Yay, that's what I have to say. I mean, I of course, am looking hard at Netflix. I want to own Netflix if you don't own it already. Home Depot down a little bit on all this. NVDA. I've been looking for the 130 level. You got today to the 126.86 level, in fact, and you held that zone. So let's go and see what we have. When we look at ARKW, it acts more like the NASDAQ has been acting with this relentless rally than it does the other parts of the market. And as you can see, while it was down today, it's up near the highs that it's recently made. The pattern is still higher lows, higher highs, which is bullish. The market is trading over its 18-day average of closes, which means the bias in the market is to the upside. These other moving averages are very far down, so I don't worry about them. And the resistance should be the upper Bollinger Band if it can get there at 122.36. So how do I view the market? With the embedded reading, I'm bullish. I think the trade wants to buy the breaks in the market, looking for the higher highs. I'm in that camp with them. Oracle. I told you yesterday there's something very wrong. This market on this part right here should have, in my opinion as a chartist, made an attempt to fill this gap. When it didn't, it wants to punish this stock. Why, I don't know. Coming down, it could make a run for the 100-day average. I don't think there's much on it beyond that, but it could make that run. It's already oversold. I don't think you're attracting new shorts. I think you got people coming out, and that's the big thing we should talk about for a minute. We are getting into year end, so you're seeing the adjustment for tax purposes and the like already beginning. People don't do it the last day of the year. You're in that now. So that could be part of the pressures on the market. I don't know what they're buying and what they're selling. They look at their whole portfolio. You actually need an accountant to figure it out as to where your advantages and disadvantages are by doing things. But this is an event that happens every year. And given the gains this market has had, that is probably what is going on. You sell the dogs, you keep what's good, you don't want to pay taxes on it right away. Those are the type of games that go on in this market. CrowdStrike, as I told you, I think that the upper Bollinger Band and being overbought, it's in line to come back to the 18-day average. But I like this. I like Broadcom. I mean, I like all the periphery markets around NVIDIA. You know, everything that services a silicone chip or NVIDIA type chips that use GPUs and so on. You can go back and forth on all this, but you're at the beginning of an artificial intelligence age. Don't buy the idea, oh, this has got a short-lived life. No, this is a world changer, and it changes all of us. It will stumble. I've never seen anything that doesn't stumble, but it's similar to when we released the iPhone. Remember that? We got rid of our old Motorola flip phones. That was the big thing to have. I remember my battery pack phone. And yeah, I had one of those too. You'd travel around the country, you'd have to have your phone with you. You didn't have to. At those times, you could stop anywhere, and there was a phone area where you can put a quarter in or whatever you had to do to make a call. Try to find one of those now. Lower low, higher high, not a lot going on there. And in Rivian, I do think it's a little overdone here, but I like what I'm seeing. Is the market embedding? Well, if you take a look with me here, is it going to let us do that? Yeah. So let's go to today. Both numbers over 90, both numbers over 80 again, and both over 80. So you're embedded. So in my opinion, on this breakdown is where traders are going to probably look to buy. Some will just say on this break, they want to buy the break, even if the chart action looks bad, they don't think it's going back under this area in the chart here. Let's call that roughly the 10 zone, and they think that this is the value area to come in. We'll see. I don't know if that's the value area to come in or not. In K-Web, lower highs, lower lows. This is, again, the Chinese markets. Look at the punishment that keeps happening in this chart as they take it down. Toll Brothers, whoa. Anything with housing, once you get to near 4 or 5 on the 10-year note, is pain in these markets. Why the 10-year? Because mortgage companies look at that. That's the one that they're very geared to. And you can see, in fact, you're starting the embedded process. Let's take a look at it. Both numbers were under 20, both under 20, and both under 20. Both under 20. You're already 4 days into it. You're at a short covering number. Why? The first challenge of a 200-day average is a number you haven't been at in basically a year. So traders will look at moving averages and say, you know, let's see if it has any more momentum from there, but it's just lost a third of its value. Yeah, about that. And maybe this is a spot to cover something. So which markets do I think are getting dumped? So if I had owned this market way back earlier, this could be one that you're dumping in your portfolio, trying to buy things that might be better. I'm just giving you what I think's going on here. When you look at the home builders, different, you know, look at same problem. Down and away, same pressures, identical. You can see where you're going. Tomorrow's housing numbers should be interesting, permits and so on. XLF, all right, this is a market that I was very pleased today it came down because I recently took this and told my clients they had to be off out of this on the weekly basis, and that's what they had bought it on, and recently they came out of it. But they were in this in very, very good position area for a long time. XLI, bearish as can be. There's the industry. Well, what's so good about American industry right here? You think 4.5% is going to drive industrial growth? I'm not seeing that. Now, what could drive it next year are the tariffs that Trump puts on. We will see how that's going to work out. Will he put them on? Will he do them selective? Is he going to give breaks on certain things? None of us have the answers to that. I don't know if he has the answer to it yet, but he will give you the answer. And I believe everything he says. This is not a man that I want to play poker with. If he says he's got 3 aces underneath, he probably does. Lower highs, lower lows, and you can see how the market is still coming apart here on the energy. So does that tell you that we're going to have a strong energy sector in America? I don't know, but you were up here recently, let's call it 95, and you've just given back approximately 10%. You're certainly in a bearish stage here. Gold market, back underneath everything, acting bearish. It would have to go up and take out the highs that you made a couple of days ago to negate the downtrend. You can't start an uptrend. Silver, same thing. I think you're in the short covering opportunity area right here with an oversold market. Copper, canary in the mine. You've heard me say it to you all the way through. This is how you judge how China's doing. Don't go by what the Chinese press says. You've heard me say that to you for a week, and I said, watch copper. It will give you an idea. It's a great market to watch for that, and not doing so good. Now we get to the bonds and notes. They're very oversold going into the FOMC and then going into Bank of England, Bank of Japan meetings this week. So I'd be watching very carefully the market. What does it do in relation, and I think that's what you want to look to Monday's high. If it takes it out, where are you going? You could stall the break. That's the possibility. In the dollar, are you going to hit the upper Bollinger Band? You're overbought. I tell traders, when you're overbought or oversold in a market, don't deploy new money in the direction of that trend. There's better spots to often do it. In FXE, you're fighting right here. This is basically the euro, and you're basically got a problem there. Now, if you can start taking out Monday's high, maybe the market gets some short covering. But that's what you're dealing with. You're dealing with a funny market. I'm watching volume, not very good. I'm watching the action in the market, which basically, if you look at how you've been doing in the stock indexes, stinks. But here's the advantage to that. If the Santa rally is going to work, Do you want to buy it when the market's up, or do you want to buy it when you've just had this kind of break? And then the statistics say, statistics don't care. If the market rallies and finishes the year higher, well, then the Santa Claus rally worked. That's how it's going to be played out one way or the other. So we'll see. Historically, the Santa rally works about 79% of the time, the traditional one. If you go back to when it was discovered from from December 26th to January 2nd, and out of the past 15 years, the non-traditional one, where if you buy it the close of business today, the 17th, and you came out January, I think it's 12th. That one is produced out of the 15 years in a row, 14 winners. So you're in that time frame, and they both get helped if you're breaking first, and then the markets start picking up and the momentum carries. I'm Ira Epstein. I will talk to you about all this tomorrow. It'll be a lot more interesting than it is tonight. You take care.